Welcome to Think Money with Benny. Here on the channel, we talk about investing in the stock market to produce passive income. If you're new here, I talk about how I grow my portfolio, what strategies I use, which stocks I invest in. That's what my content is all about. If this interests you, click the subscribe button so you don't miss any of my upcoming videos. And don't forget to hit the like button to help support the channel. Today, I'm talking about why I use a margin account to trade. When I first heard about margin, I thought it just meant borrowing money from your brokerage to buy stocks with money that you didn't have. However, using a margin account is not just about borrowing, it's also a tool I find very useful to trade. If you've been watching my channel, you know I'm all about building a dividend growth portfolio. I also trade options, selling cash covered puts, selling covered calls, and I trade shares to help grow the portfolio. In my previous video, I went over all of my stocks, how many shares I own, cost basis, and my future goals. The link to that video will be up above. I mentioned trading with margin in that video, and I got a comment from one of my viewers asking me to make a video about it. Thank you for that comment, Melissa. Before I get into trading with margin and why I use it, here's a 1-month chart of my account to show you a breakdown of how I grow my portfolio. Looking at the past 30 days, we can see my account has gone from down here to up here. So how does this happen exactly? First, I grow my account by making deposits consistently. Second are the market gains, which fluctuate throughout the year. Recently, we've had a big upswing with news of a vaccine for the Rona. Third is dividend income that my portfolio generates monthly. And we also have a portion for trading. This is the part that we're going to talk about in this video. When I transferred my portfolio from M1 Finance into Fidelity, thank God, the word margin appeared next to all of my stocks. I was confused because at the time, I thought margin meant borrowing. I called Fidelity to ask them to remove margin and get me back to a standard cash account, being that I never planned on investing money that wasn't mine. Fast forward, I began actively day trading, and soon after, I got hit with trading violations and restrictions. I thought if I just had an account of 25K or more, I could day trade all I want. What I didn't realize is that with a cash account, you need your trades to settle before you're able to reuse that capital as buying power again. Here's an example of what happened to me. Let's say I had $10,000 in cash in my account ready to trade. I bought 5K worth of shares. Minutes later, I sold all of the shares for a profit. Moments later, I bought another 5K worth of shares and sold soon after again. At this point, I've used up the entire 10K I had as buying power. But I think that because I sold all of the shares, I still have 10K plus the profit in cash ready to keep buying. So I bought again. That's when my account got hit with free ride and good faith violations. A free ride violation occurs when you buy stocks and then pay for that purchase by using the proceeds from a sale of the same security. A good faith violation occurs when you buy a stock and sell it before paying for the initial purchase in full with settled funds. I'll post a link with the definitions and examples of these violations in the description so you can check them out. This caused my account to get restricted, meaning I'm only able to buy stocks if I have enough settled cash in my account before placing a trade. This restriction lasts for 90 days. So at this point, I was just like, what the heck is going on? So I called up Fidelity and they explained everything to me. They told me I can avoid getting these violations by switching over to a margin account. This doesn't mean that you'll be borrowing money. It means you can expand your abilities to trade. You'll now be able to have more buying power and the ability to get in and out of stocks without breaking the rules. Let's look at an example of a margin account from Google Images. In this case, the account has $6,000 in cash. If this were just a cash account, you would only be able to trade in and out of stocks up to $6,000. But since it's a margin account, you're given a lot more buying power to trade with. As long as you don't buy over your cash amount, then it's not borrowing money. This is how day traders make sure they always settle their trades fast and avoid running into violations. Day traders use a margin account with a good cash balance, and they fund trades as type margin, not as cash. In summary, if you have an account with 25K or more, and you're labeled as a pattern day trader, and day trading is a strategy that works for you, you'll want to use a margin account to make things a lot easier. This isn't something that passive investors should worry about, but if you become an active trader like I have, you will know what I'm talking about when the time comes. If you have a question that you'd like me to answer, just comment down below and I'll answer it in my next video. I hope you learned something from me sharing my experience. If you did, go ahead and smash that like button, subscribe if you haven't already, and I will see you in the next one. Peace.